Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, August 25th, 2015. Let's take a quick look at what the markets are doing here. We have quite a few stocks coming up to resistance, so I'll just go over with what I'm seeing here. We'll try to do this video quick as the markets are moving quick. Let's go ahead and take a look at things here. It's about 10 after 11 Eastern time right now, and what we're looking at here, this is a 5-minute chart. Let me get this out of the way. These charts look so distorted. I mean, even if you go to like a 60-minute time frame, the move down has distorted the charts so much with that big move recently that it's hard to make heads or tails of them. But what we're looking at here is the QQQ. As I mentioned yesterday, the first overhead resistance would be the gap. So the Qs, most indices, the SPY, I believe, hit it. They actually backfilled the gap in after hours, if I'm not mistaken, just after the market closed yesterday. IWM backfilled. So as mentioned, this is resistance, and you can see the Qs have tried on several attempts. We tried yesterday, fell back. You can just barely make out. I have the daybreak line set in here, the vertical gray lines. So this is today's open here. We'll zoom in a little bit, and you can see so far the Qs have been pushing up. The markets are very dynamic, and so is my positioning, my thoughts. As I said, I went started covering some shorts here the other day on the move down on Friday, and just covered just about all of my shorts yesterday in pre-market and shortly after open. Got some great fills, and then went pretty aggressively net long. I was slightly net long coming into the day, so finished booking up the rest of the profits and doubled down, or more than doubled down, and so rode that up. So far so good. We got the bounce I was expecting. As I mentioned this morning, I was leaning towards a break above there. I'm having some concerns now. I just posted on the site a few minutes ago that I did decide to go ahead and I booked about roughly half my profits on my QQQ long position. And for the reasons I'll get into here. So this number one, we are at resistance, and the market has yet to take that out. Now, I left my position on, about half of it, because I do still favor a pop above here. It might be an intraday pop. It might get sold into, or we could run. And let me just say this, because I haven't stated it on the site. I am completely open to this being one heck of a buying opportunity that could lead to a rally that goes on for weeks or even months. But I'm not there yet. Right now, I'm just looking to play the initial bounce, the oversold bounce, and seeing, like I said, some technical developments. I'll call them stick saves that we saw yesterday with a lot of stocks, as I posted, closing back above some key support levels, which were broken intraday. And as I often mention, it's really for swing traders who trade largely off the daily time frames. It's all about the end of day closing values. So the breakdown yesterday, where we went, of course, there was a mini crash in a lot of securities, even the QQQs, as liquid as they are. You look at the percentage drop on the Qs, it was a lot larger than the NDX itself, the actual Nasdaq 100. All right, so enough of that. Either way, here's what we're looking at. Qs at resistance now. If we can take that out, which wouldn't surprise me, we can rally from there. It might be an intraday pop. That's sort of what I'm leaning towards. I think we might get an intraday pop if we do break out. I might either just take full profits on the pop and run, or just trail a relatively tight stop up. We'll see. But now what I wanted to go over is really where the Qs are going to go will be largely dependent on its components. So what I have here are this is a list of the component. Trying to talk fast. Got a lot going on today. This is a list of the components of the QQQ, or the Nasdaq 100. I have these sorted by market cap. So we have Apple here first, and this was mentioned yesterday. Apple closed, as I pointed out, just below this horizontal resistance line. It had one heck of a move off the bottom, as most stocks did. And today we gapped solidly above there, and we're above this, which was my former third target, I pointed out the top on Apple way back here the day actually hit its all-time high. I pointed out that bearish engulfing candlestick and said that may be a potential top in Apple, which it was. Then I mentioned some long-term support lines, the 40-week EMA, 200-day EMA, long-term trend line. So overall, Apple is in a intermediate to longer-term bearish technical posture, and this bounce should be for longer-term swing traders, including myself. Overall, I'm going to view this as a shorting op, and we're getting close to that. Now, I'm not there yet, but you can see a cluster of resistance. This is an old line here. This at least the target was set at 115.25. That line was at 114.58. I always cover my positions. I didn't have Apple as an active short, and personally, I didn't take it. I was short the Qs, but either way, that's where the former support was. And there's a few candlesticks that went through there, so I'm going to say right here around 111.30, I see some reactions here most recently. Let me get that out of the way. And Apple at this point is now contending with support. And what I'm referring to here, we have a few reactions here, candlestick bodies and or wicks, tails at that level. You go back, there's a gap right here. I guess you can make that out on the chart. We have that gap going back to, let's just put the crosshairs on it, January 28th. So there's, pretty decent resistance right now on Apple where we're at. And by all means, if you're a longer term trader, you could certainly establish a short position here, give it a little room. The markets are very volatile right now, and what that translates into is a lot of stops being run. I often talk about momentum when a stock, whether it's moving up sharply or down sharply, it's very common to see what I call an overshoot of a support or resistance level, and I call that a momentum-fueled overshoot. So in other words, if a stock has support at 100 and the stock's been plunging down from 130, it would almost surprise me to see that stock bounce right at 100. What you usually see is it shoot down below. The momentum carries it under. A lot of stops get taken out, and maybe it goes down to 99, whatever, and then shoots back up. That's what I talk about, momentum overshoot. So with the volatility we've seen lately, these support and resistance levels that I'm giving you, you have to sometimes you need to give yourself a little bit of room on the stops, or you're just going to get stopped out left and right in this market. So that's Apple. Apple, once again, nice recovery, but back to resistance. I would be going, if it were a swing trade for me, I would be going short here before I'd be going long. I have no position in Apple nor care to. Like I said, I am long the Qs, which is very heavy in Apple anyways. All right, let's move on. Google, last night at the close, I pointed out all the stocks that I'm covering today, at least most of these. This is a downtrend line on Google. This is the Class A shares. They look identical to the other symbol GOOGL, same chart as GOOG. This was a downtrend line back here off these lows in February. 1, 2, 3, 4, 5 tags. We broke out above it. There was also a couple horizontal former resistance, then support lines. So Google, nice action on the pullback. It came and kissed that downtrend line I had to the penny. I mean, you could see a perfect tag here of that purple downtrend line. So it was pointed out yesterday at the close. This is one of many reasons why I went home pretty aggressively long. When I say fairly aggressively, keep in mind my position sizes right now are commensurate with the volatility. In other words, I'm not going to go balls to the walls long or short here when the market's moving up and down 5% a day. It's just absolutely crazy. If you're caught on the wrong side of the trade, you'll get wiped out. So you can downsize your position sizes and still make a decent dollar gain because of the above average percentage gains here, if that makes sense to you. So what we're looking at here, now this is a pretty solid resistance level on Google. This line here that comes in around, we'll call it 650. And Google is just below that now. So you can see the reactions there. This is really where the stock the bottom fell out when it didn't hold that level. So Google is right at or just below a pretty solid resistance level. So as I said, I'm not so far away from adding back short exposure, and I may by the end of the day just do that. I wanted to just share my thoughts here first. Here's Microsoft. Again, I pointed out, this one had managed to, save, had a little stick save here. That was a key support level at 4018. And now you can see this line that I'm highlighting here. We can draw it out. Let's try to do that real quick. We have, numerous reactions from here. Let's see if I can do this. There's a reaction there. Reaction high there, a reaction high and a gap there. That gap was then back tested here. And again, I'm trying to, it's hard to draw on this screen, but this is a line. So we have Microsoft right at resistance. And again, as I'm doing this video and as I'm sharing, trying to get this out as I notice these developments. So I may go ahead and even close out my remaining long position in the Qs and actually reverse that to a short here soon. Here's Facebook. I also pointed this one out yesterday. Again, these are the top components. Right now I'm just going through the Qs, but many of these components that are the top components of the QQQ or NDX 100 are also the top components of the S&P 500. So Facebook, great. This was a really nice support level here around the 7135 area. I've been tracking this ascending price channel that's defined by this white line down below and this one up top. I often draw these. I put a midpoint line in most channels because I notice that a lot of stocks tend to trade well off the midpoint of the channel in addition to the top and bottom of the channel. So what Facebook has done, you move down, tag that key support level on the breakdown yesterday, moving all the way from the midpoint of the channel down there, but has now come back and has just regained. I mean, we're just on top of the midpoint of the channel, but not safe enough. Really, I would say I'm neutral on it right now. I have no position on Facebook, don't care to, but I just wanted to point that out. But it does have, even if it continues to climb up there, look, we have a gap right here. The top of that gap is about 89.25. And then if I put a horizontal line here, I'll do that right now, you can see just a wall of resistance defined by this line here. Let's just color this yellow so we can see it. That's quite a bit of resistance to contend with. And again, you have the gap there, the bottom of the gap, top of the gap. So quite a bit of resistance overhead in Facebook as just about every other component of the Nasdaq 100. So again, we're getting probably, if not right now, close to a really good shorting op to swing the next leg down in the market if we do get one, as I expect we will. Amazon, another, just technicals are working so well lately. We finally broke out of that frustrating trading range where the technicals don't work well when the market's chopping around. So here's my chart on Amazon. Again, this was posted as a static chart yesterday. The fact that Amazon held this support level and managed to close above it. And now look where we're at. If you look at this green candlestick here, I have this horizontal line here around the 493.26 level. There were 1, 2, 3, 4 attempts to get through that level, then a powerful gap up. So now that is the bottom of this big gap right here, the July 24th gap. Prices came back down, held it there, and once they broke that gap, they backfilled it. And then yesterday, with everything, you're going to get pulled down, whether, the good and the bad. The good got pulled down with the bad yesterday. But with that being said, this was a key level and still is, and now Amazon is pushing up against that level. So now broken support becomes resistance. So Amazon is trading just below pretty key resistance. Okay, I won't do them all. Let's just look at one more here. Gilead. Biotechs, as most of you know, I've been uber bearish on, and that was one of my it was my largest short position, which I managed to close out. Oh, gosh, I do that pre-market or right after the open yesterday. I had that LABU short and closed that one out. Didn't get to put an official post up on the site, but as I mentioned, closed out most of my short positions, and I'm looking to re-enter that soon. What we have here on Gilead, let's try to get this out of the way. Here's a nice trend line going all the way back to April of 2014. 1, 2, 3, 4, 5, 6, 7 tags, and then finally a breakdown. Textbook technical analysis, a breakdown. Gilead was covered in the recent biotech video where I said it looked like a bear market was imminent in the yeah, biotechs. And this was a very solid support level, 85.40. You can see defined by numerous reactions from below and above. And in the mini crash or the meltdown yesterday, we just kissed that. And look at that rally. I mean, wow, so nice comeback. But look, we're about to backtest that breakdown, and this is a very solid, affirmed breakdown. We have very impulsive price action coming down after the breakdown on Gilead. So, we're not there yet on a full back test, but to be honest with you, I don't think we're going to get that far. I can also see some horizontal resistance right here where I'm holding the crosshairs. So call that 108.30-ish, and that's about right. Stocks trading just below that. So in my book, you could short Gilead here with a stop not too far above that trend line, call it wherever, 116-ish. And your downside loss if wrong and stopped out is minimal, whereas if this one's going a lot lower, as I suspect it will, let's just take a look at a weekly chart. We had this long-term trend line from back in 2012, and that was my first weekly, target that I put on that biotech video. So we kissed that yesterday, and that is support. So, one thing I'm looking at or expecting here is on the next thrust down, we're probably going to retest. A lot of stocks will retest the lows that they put in yesterday, and those lows are going to act as support. And if and when that breaks, then we're probably going to, the most likely signal that we're in a much more prolonged, extended bear market. Otherwise, this may just prove to be a correction, a long overdue correction, in an ongoing bull market. So that's where we're at. So either way, I wanted to point that out, that for those of you that either missed the being short in the last few days, or we're short and want to reposition, it's looking pretty objective here. If you put shorts on, you can of course use index ETFs. I still think, I believe I stated on the site just a few days ago that I thought that QQQ had the most downside potential of all the major indices, and that has been the case. That's largely due to the fact that the energy stocks are washed out. They're a large component of the S&P 500. Tech stocks, as I mentioned, I've been bearish on the semiconductors. Did a video on that a couple months back, and of course they embarked on a bear market from there. That was in the early stages of their bear market, and they're actually firming up now. So more on that later. I just wanted to share this for those of you interested. Like I said, we have a lot of stocks coming up to resistance here, so it's going to be a tough sledding ahead for the Nasdaq 100, for the QQQs, and the broad market if it is going to push higher. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed.